In this video, I want us to look at analysis on this market is currently ongoing. This is V251X. Just want to do a top-down analysis from top to the bottom. They will actually know our pinpoint our entry point and our entry levels, where to enter the market and how to exit the market. If you don't know how to exit the market, you don't know how to trade, enter the trade. You are a newbie, you are a newcomer, you are you want to learn more or know more about Forex, you can actually come into my DM, my channel. This is Mikey's FX Academy. You are welcome to today's video, and I am here to guide you on the activities currently on the synthetic indices. This is where I apply my trade. I've been here for a very long time. This is my 6th year on volatilities, synthetic indices precisely, and I know my way around it, so I can actually guide you through. So now we're going to do a top-down analysis. Let me take these guys out. This is it. This is how the market is currently. This is on the higher time frame. Looking at it from the 24 hours time frame, this is how the market has been. The market moved. This is a mini break of structure. These people, you may not understand the logic or the trick behind their trade. They have introduced SMC or smart money concept without making it look so obvious to traders. Now this is what we have, a mini break of structure. This is like a break of structure because, as you can see, the market moved from this level now, where it is now, moved upward. This is another, I can term this a mini break of structure. I just want to show you something. There's a little trick you need to learn about this. It has been happening in the trend day in, day out. If you don't understand this trick, you actually miss out. Just watch till the end. There's a mini trick I want to show to you. Very sensitive but very important. If you don't take it closely, or take it as it is, you will miss out. Now I just want to guide you on something. This is the daily time frame. You see this candle high, you see this candle, this very candle now, this is one very candle now. You see this high was taken by this body, so I can actually term this a break of structure, though this candle body moved above this, you get. So this is it. This candle body moved up. I just want to show you something. Now see another thing. I'm not saying whenever you see it all the time you pick it, but I just want to guide you on something very, very important. Now look at this. Look at it downward. Let's go down. Let's proceed down. This is another level. This is a key level. This is a key level. I want to show you something now. Let's start from this level. Now this is a break of structure, right? You call this a break of structure because you see what happened. The price moved down, got rejected, by this 3 candle, then continue selling. So we say this structure was broken here. If we have to take it into the line chart, you see now it's a break of structure, right? Now see something here. When we have this break of structure, look at what I want to show you now. When we have this break of structure, if I am to zoom this out, whenever you see a break of structure in line with a fair value gap, this is it. This is a break of structure. The candle that broke the structure. Now see the fair value gap. Let me drag it a bit. I drag this now. This is a fair value gap, is a gap between 3 candle move. Now you see 1, 2, 3. This is it. 3 consecutive candle. It can also be in this format 1, 2, 3. This is also a fair value gap. If I'm to take this one like this, put this one into this thing consideration, this is also a fair value gap. This is also it, because when price tapped into it, you see the rejection. But because price has actually been triggered by this double bottom here, we are going to the upside. You see this one now, you see this movement now. This is what actually pushed the market. Because if I'm to extend my RSI, you see the price up there is not agreeing. You see we have a double bottom here, but you see on the RSI chart we have something like this. We have a lower low here, we have a higher low here, higher low. So price has actually moved. So I'm not here to show you what my RSI is saying. I just want you to know that with all these confluences, you can actually trade with ease. Now see something now. This is it. Now see what happened here. We have this movement You see price moved, give us this little consolidation, because of this fair value gap. See the first fair value gap that happened when the price broke on this break of structure. Now let me term this a BOS. Now this is a BOS is a break of structure. Sorry, let me go back to my BOS. Now this is my break of structure. Now this is my first break of structure. Now let me drag it a bit. Now I have a break of structure. I have a fair value gap in this format. This is my fair value gap. This is my fair value gap. If you don't know what fair value gap is the gap between 2 and 3 consecutive candles. This is a fair value gap on a straight on same line. It's an imbalance in the market where price can actually come back and fill the market. So now price left this gap. See what happened when this candle retraced back from this level. This is also a support zone. This is an order that was left behind. This is a support zone here left behind. You see the order now. Price came to fill it back. You see something here. This thing is actually working in the chart all the time. You see, this is a fair value gap. The gap between this 1, 2, 3 candle. You see the gap now. Price came back. It was rejected. Came down. Now we have this strong movement upward. As you can see, it's a fair value gap. Now the fair value gap has already been, mitigated. It has been used. So when price later came down, there was no reaction on this other side. Now this is another fair value gap. Now price came and tapped on it and gave us this movement to the downside. As you can see, price came down, give us this low. This is the last low before this up move. Now you see price started going up. We can't say this is a fair value gap, but was left behind. You see, the price didn't retrace back into it. Even this one, price left this one. Price didn't retrace back into it. Now, see something. Price started moving up after this little push. This is another fair value gap that was, respected, but price continued moving to the upside because the market has already been foiled by this guy. Price started moving to the upside. We see now, look at what's now happened. After this little move here, we have this consolidation sideways, and price continued to the upside. Now see what happened. This is the hourly count, the daily time frame. Now see this candle, this one, the body closed above it. If you go to the lower time frame, let me take this to the lower time frame so you can see what I'm trying to explain. Go to the 4 hours. Now let's look at what we are looking at. This is it on the 4 hours. As you can see, on the 4 hours is a break of structure on the 4 hours. Can you see what I'm trying to explain now? On the 4 hours, we have this a break of structure on the 4 hours. This is it. It's a break of structure on the 4 hours. There you are. Then this is the break of structure. Inside the break of structure, like we have it now, you see there is a fair value gap that is in there. There's a fair value gap there. Let me take the fair value gap so you can see. This is it, the fair value gap. There's a fair value gap inside the candle that pushed the market to the upside. Now see what happened. The candle closed inside the fair value gap and continued buying upward. So at analyzing this market, you have to look at it critically from multiple time frame. You don't just focus on one time frame when analyzing your market. And this is it. This is how the market started, going to the upside. The same thing happened here. Let me take this guy out so I can actually look at it again from the other time frame. Now see what happened here. We have similar thing here. If I'm to zoom this for your, for you to see very well, we have a mini break of structure here. Because if I take it to the lower time frame, you see the break of structure is well, printed. Now we see this is a fair value gap. There's another fair value gap inside the break of structure. Remember, where we have a break of structure or we have a candle projecting higher above a particular range where you have rejections, that is a mini break of structure or a break of structure. Now on the lower time frame, let's look at it again from the lower time frame. Here you are on the lower time frame here. Now going back to the 4-hour time frame, we can actually see what happened clearly there. See, Yeah, the break of structure is well printed in the chart. As you can see, this is it. This is the candle that break the structure. Here you go. Here is the candle. Let me make it blue so it can be printed there. That is it. That's the candle here. On the this is the 4 hour now. 4 hours. Now inside this range we have a fair value gap. A fair value gap here. This is it. This is a fair value gap. Now if you extend it a bit furtherward to this, as you can see, the market came in, tapped in, and continue doing its thing, moving to the upside. That is the trick. That is it. That is the logic behind this. Now see, the market came in, closed in here, and continue buying to the upside. Look at it from the higher time frame. It's the same thing printed, but it's just printed in this format. You see it a week. It came in as a week and tapped in and continued buying to the upside. Let me take this guy off and look at this again. This is another mini break of structure. As you can see on the higher time frame, this is a 24-hour. You see this candle give us this indecision candle. You see this very candle now. We have this struggle, price struggled a bit here. Now we have this indecision candle, and price, this candle broke through. You see, this is a mini break of structure as well on the higher time frame. It is not pronounced as a break of structure on the higher time frame. But if we are to zoom down to the 4 hour, let's zoom down again. Let's zoom down so you can get a clearer picture of what we have here. Zoom down to the 4 hour time frame and bring your chart close a bit so we can actually see what it's saying. Now this is it. Is a break of structure on this time frame. Now looking at the fair value gap that was printed behind after this candle came up, you see the price just came in and tapped in and continue buying to the upside. This is something that is always is common in the charts. It is very, very common. If you know if you understand what fair value gap is, how to spot it early, how to spot it from the higher to the lower time frame, you can actually know exactly when to enter the trade and when to exit, and how to actually trade and make profits in the forex market. This also applies to the major forex. If you are into major forex currency pairs, Euro USD, USD GBP, gold, and the likes, even the BTC, this is also applicable. You can actually apply this same method and still make something out of it. This is it, a break of structure here. All right, now let's extend a fair value gap out of this candle that caused the break of structure and see what I'm trying to explain. Now see, we have rejection, multiple rejection. Now see what is happening now. It's rejecting as well. It's rejecting. Price is doing, this is a lower, we are looking forward to a lower high, but price is respecting the fair value gap. As you can see on this leg, you see this move now. Price is respecting this. This is a move, swing down. Price is respecting the fair value gap printed here. It has been tapped once, so we are waiting for the candle, this candle, to do its thing. We just wait and see. The price is supposed to go give us a lower, just as we have this lower high here, we have a lower low here. We are looking forward to a lower high within this range. So if we are to look for where to place our entry, maybe we can say our entry will be just within this range. Within this range, our entry will be around this area. Let's see if I'm to break it down to the 1 hour time frame. Maybe I will see a confluence point where I can actually pinpoint as my entry. Yeah, this is it. My entry will be around this area. So on the hourly, this is the 1 hour. I have a mini structure here. So if I'm to look at my entry is just within the range. So I'll say my entry is within this order block and this fair value gap. So my entry is within this range here. You see this order block here. This is where I'll place my entry. Then my stop loss will be above this area. I just want to be safe. I'll place a buy, a sell stop here. My stop loss will be around this area. Even just place it above this high, this swing high, just in case the price struggles to that spot. So I'm looking at a higher lower high, then price coming down to do another lower low. So we are still watching the market. I'm still watching the market. If this market executes, I will actually come back and show you a video on how the trade was taken. So if you are new to this channel, this is your first time of seeing my videos online, you're welcome to Mikey's FX Academy. You can actually drop your comments, send us a like, or just subscribe to this channel, and you will be getting daily tips, daily videos on how to actually trade the synthetic indices. If you are a synthetic indices trader, even if you trade the major forex, it's the same procedures, the same application. There's no much difference, it's the same thing. So you're welcome to my channel once again. See you in my next video. Have a good one.